Welcome to the Evolve Voices podcast, a platform to hear about the fascinating stories behind the people that power global commerce. I'm your host, Jade Maravillas, GTM advisor and your Asia and Europe host for Evolve Voices. In commerce, payments can feel like a last mile or even an afterthought. But if you don't get paid, you don't have a business. And in today's landscape, payments have become anything but simple. From buy now, pay later to tokenization, stablecoins, embedded finance, the choices and the complexity have exploded. Keeping up with these changes isn't just a technical task, it's strategic. The right payment setup can unlock new markets, improve customer experience, and drive growth. Today, I'm joined by Joel Bond, a product leader with deep expertise in payments. From launching debit cards at Visa to scaling buy now, pay later, embedded finance, and acquiring at fintechs and scale ups. We unpack how payments have evolved, what's driving innovation today, and what it takes to win in an increasingly crowded and commoditized market. I hope you enjoy listening to this podcast as much as I did recording it. But for now, here's Joel Bond. Thanks so much for joining us today. So first of all, we're doing this on behalf of the Evolve community, which is a global community of commerce professionals. And I've started thinking about a lot of commerce professionals not really knowing much about payments. Ultimately, they just say, okay, we need to get paid. But there's so much going on within the industry and so much innovation as well. And I thought if I would invite someone who knows payments inside out, and I know a lot of people in payments, I myself work in payments, but if someone can shed light into what the past has been, where we are today, and where the future is, it's you. So welcome to the podcast.
Oh, thank you so much. And I'm absolutely thrilled to be here. I mean, I've got such a big passion for payments. I've had the opportunity to work all across the industry. So, I love to share my insights, where the industry has been, where it's going, and some thoughts on some of the trends and what to look out for.
Great. So how does someone actually get to specialize in payments?
Well, let me tell you a little bit about my journey. So I started my career in management consultancy. I did a master's degree in data science. I specialized in business cases. After, a number of years, I took a role at Visa doing corporate strategy, looking at market insight, market analysis. And it was lovely being able to go to an office every day rather than doing consulting and traveling all across Europe. I loved it, but I rapidly had the opportunity to join a product team, and I loved it because I got to use my strategic skills, but as well I got to roll up my sleeves and develop customer experiences and deliver real value. And it's very different to strategy. And that was the beginning of my payments journey. And I went to Visa, and I think I've been incredibly fortunate in my career because when I joined the product team, I got to launch new products. So I launched the Tesco Bank current account and Visa debit card, which was the first challenger bank in the UK, followed by the Lloyds Bank Samsung Galaxy S3, and they did that in partnership with O2 and FIS. I launched TSB Bank and their Visa debit card, and then finally All Star, which is a fleet core company. Some people know them for their fuel and fleet card. I launched their Visa commercial credit card across 3 markets in Europe. And then since leaving Visa, I was at Visa for 8-9 years. I've worked at startups and scale-ups in fintech and payments, always within sort of product roles, helping drive scale and experiences that customers love.
I remember you described yourself to me as a commercially minded product guy, which is, I hope there were more of you, but unfortunately, I think you're one of the unicorns. So tell me, do you skew towards either side or is it really a combination of both?
It's a great question. There are different types of product managers, and product managers really evolve in different ways. I've always believed from my experience that 80%, 90% of product people typically come from a strong engineering heritage, or they'll come from a product owner heritage. And then they grow up and they become a product manager and a product leader. And they can be incredibly good product leaders, especially when we're in a market where products are becoming increasingly complex, especially when you have products that you don't even feel or touch them. They're purely API driven. But then you also get product leaders like me. I come from strategy, and sometimes you see them come from commercial backgrounds who go into products. So we don't have all of the technical capability, but we understand the market. Now, you get benefits and pros and cons for each type of product manager. But where I think my background allows me to really stand out is being able to understand the market, which means that we're not in the wiring, and it's very easy to get stuck in the wiring. But we're able to say, actually, is what we're building, is it scalable? Is it going to fit the needs of a market, not just one customer? And are we going to make money? And they're the key parts to that. And if you can get that piece right, the rest just follow. And included within that are actually, what are the values that our product stands for? You know, everyone thinks that it should be clear, and it's not. You know, are we clear about the mission and the vision of our product and where it's going to go and the journey we're going to go on before we get to the wiring? And the wiring is important, and it's being able to step up from the trees in the forest and look around. And that's where I think I've always had my passion, to be able to drive that type of value.
I wanted to pick your brain a little bit, especially more on the strategy side, right? And you rightly said that your, I guess, superpower is being able to see things from a macro perspective and being able to translate that into what needs to be done from a product standpoint. When you started out your career in payments, what was the macroeconomic environment that we were living in, and what were driving decisions to build payment products, and how has that translated into what we are seeing today, and what, I guess, a big question is what we're going to see tomorrow?
Yeah, when I joined Visa in 2010, cloud computing was really in its infancy. Some people really didn't understand why Amazon and other players were going into this space. Visa, it was the debit card. That was how all payments were made. And it was really hard at the time for startups to be able to join Visa, and I'm sure it will be the same with MasterCard. I think it may have been easier with them to actually join as a member and get access to the scheme. But the regulators were innovative across Europe, largely driven from innovative thinking in the UK. And they developed the Payment Services Directive. So you had number one at that point. You had number two coming in, and that was all about transparency, opening up the markets, allowing non-traditional players to be able to compete. And so what we saw was a gold rush of startups from maybe 2012 onwards, really coming to the market. The early days of Revolut and Monzo, when Revolut was literally just a prepaid international debit card where you could bought shares for nothing on Cedars. So these were the type of companies coming through, just testing the market, seeing how they could compete. And there was a lot of complacency with the companies who were already in place. Visa didn't see this really as a challenge for them. Visa's current strategy is a network of networks. In those days, it was, we're going to protect our network. It was a very different approach. The current banks, especially in the UK, Visa had 95% of debit, which was, and it still is, 80% of all the payments in the UK, thought we're going to protect the banks, the likes of Barclays and HSBC and Lloyds, and they were the incumbents. And I think that complacency meant that organizations who could foresee the future could come in and really change how payments are made.
And today we've seen the pace of change in terms of innovation. I think when I first started out in payments, it was very much driven by, your four-party model. I don't know if a lot of people know about that, but you have the merchant, you have the acquirer, you have the issuer, and you have the schemes. And it was very much a credit card / debit card sort of play, right? And today we're seeing so much innovation being driven out of different parts of the world, driving the backbone of payments. Tell me a little bit about your experience in that part of things.
Yeah, absolutely. So after FIS, I went to a buy now, pay later startup called Divido. And it really hits on what you're saying. Buy now, pay later is a really great example of innovation coming in to change the way that people pay. And what's changed about payments more broadly is that it's becoming more frictionless. It's not about the payment, it's about the customer experience. Buy now, pay later is the evolution of two industries coming together, which is fast fashion and being able to make a payment at the point of sale, which is embedded finance. And when they come together, you get a loan exactly for what you need at the point of sale, a bit like a credit card used to be or is. Why it's innovative is that it reaches a completely different market. If we think in the UK, 10% of transactions are made on credit cards, yet a lot of people in our industry often have one. We're not representative. And most people don't have a credit card. Gen Z and younger generations, millennials, often don't have credit cards. They like to manage their money in other ways. Buy now, pay later allow people in fast fashion, the likes of ASOS, to be able to take a small micro loan to get a large number of clothes. And they grew up together. So I worked on projects. I worked with Nordea implementing buy now, pay later all across the Nordics. And what that enabled customers to do was, instead of paying for their product there and then on a debit card, it means they could take a loan and they could do that at the point of sale. And that was really innovative. Nordea Finance had buy now, pay later, or they called it Nordea Finance, and that was its product, since the late 90s. But their product was old, it was green screen. The experiences that customers would go through is that they would go into one of the stores that had this product and they would have to speak to a sales colleague and give some really sensitive information. They would have to say where they lived and how much they earned, and they didn't really like doing it. So we gave a product where the customer would get a link. They could fill in on an iPad the information themselves. And that was incredibly empowering. Very difficult culturally for the bank and the merchants using it to use it. They found it really difficult to let go and empower those customers. And then in addition to that, we gave them ecom. And that's one of the biggest changes that's happened in the industry. So we had integrations into all of the largest commerce platforms, and we've talked about commerce platforms and their development. We built integrations into Shopify and WordPress, all of them, BigCommerce, just so our customer be able to work with those merchants and open whole new channels. In the first year that we were live in those markets, I believe we created like an additional 20 million euros of business just on e-com channels. So if we look at how the development of payments has gone from in-store to e-com, and the experiences people get, even if they're buying in-store, has been transformational. But when it comes to the payments, our customers would go online, they would buy from those merchants, and then you get the checkout page. Now, if I remember my early days at Visa, would say, would you want to pay with Visa, MasterCard or Amex? And now the number of options is really, really intriguing. Sometimes it can be too much and overwhelming. And this is where the challenge of what banks and the ecosystem has to address. But now you have buy now, pay later, pay by bank. It could be you pay with one bank and then you end up paying with multiple banks behind it. And companies like Apple are creating these through Apple Pay, creating amazing experiences through infrastructure they're creating as well. So this has sort of been my first example where I really start to see innovation take place.
So that's buy now, pay later. Before I ask you about other things that are happening in the market, specifically within the blockchain and tokenization and stablecoin environment, one of the last people I spoke to for this podcast basically founded Southeast Asia's first buy now, pay later platform. He's a good friend of mine. He was my former boss at WorldPay, so another payments nerd. And I did ask him this question, which I want to pose to you as well. As someone who's worked in the buy now, pay later space, when you were developing the product, any ethical concerns about, the easy access to unsecured credit come into play when you were creating these products? And if so, how did you guys address that from an ethical standpoint?
Yeah, it's a really powerful question because it is a payment, but at the same time, it's a loan. And it's really important, having worked in the UK and all across the Nordics, it's really important to protect customers and to make sure they're taking out the right loan. I don't believe there's an ethical question. I was looking at the value proposition, and this is part of it. But then you go on the journey of actually, how do you make those decisions, those lending decisions about those customers? What does the lender need to know? And those type of decisions, firstly, depends on the lender and the attitude they have towards risk. But also there are new technologies which are changing what that looks like. So for us, as the technology platform provider, we didn't take the risk. So it wasn't something that really was at the forefront. But the challenge was, before buy now, pay later, these customers never had access to credit. And even though they weren't necessarily let's say what they would call a prime customer, there's no reason why they shouldn't. And what Buy Now Pay Later said was, we recognize there may be, these are near prime customers to some extent, may not be who credit card companies would typically have reached out to in the past. But there's absolutely no reason why they couldn't manage a loan, a small loan over a period of time, even if it's just 6 weeks, because they did have the funds to be able to do that. So they created not only clothing and developing a proposition in terms of the actual product the customers were buying. This was a whole new segment of the market that's been opened. And that's a lot of what fintech has done. So if we think about the hundreds of different payment companies which have started, a lot of them are around the value proposition to consumers and businesses, targeting them specifically. I like to think of that as sort of community banking. So 100 years ago in the UK, there used to be different banks on every high street. And now that's really been taken over by building societies. Now we're seeing that on a global basis. So you might see a bank account talking about, we're about the environment. So anyone that really believes in the mission and the vision of that bank can open a bank account anywhere in the world, wherever they live. What we're doing with Buy Now Pay Later is you're finding those type of customers and serving them. And it was all about the underserved. And we're seeing it with businesses as well. So when I first joined Visa, the small and medium-sized enterprises were very much underserved. They often had their products from the consumer side of banks and weren't supported by corporate side of banks and had very poor bank accounts. I recently went to open a business bank account with some of the big names that we know. I had a look at Starling and Monzo and Revolut, and it's incredible how well that market is now served. You can get not only a bank account, access to international payments, payment acceptance, loans, and then that's just the beginning of what Stripe and other companies have created. So all of these underserved markets are being addressed, but ethical challenges need to be looked at. And I have seen, even in the last few days, a lot of companies really attacking some of the big players that deal directly with merchants, saying, actually, you need to be really careful. Merchants need to be really careful about who they partner with because of who has their data, how they're managed, the power that some of these big companies have over, could be consumers or small or large businesses as well. So one to keep your eye on.
After Divido, you joined Cash Flows, which, going into the theme of what we've been talking about, is a company that helps SMEs kind of onboard for merchant acquiring or being able to accept payments a lot faster, right? Is that correct?
Absolutely. So I joined Cash Flows. Cash Flows is a payment service provider and acquirer. Really interesting company. Lots of companies out there that do that. So when I joined, very early days of taking on their own customers, really the vast majority of their business was from ISOs, so independent sales organizations that would pick up merchants, typically bricks and mortar. So they would go to shops and they would sell point of sale kit and we would do the acquiring for them. I went with them on a journey where they really wanted to develop their own direct customer business. So I developed for them sort of an end-to-end onboarding journey, help them develop their point of sale capability and really enhance their gateway. Because a lot of payments is all about volume. If you want to make money, you need volume. And we wanted to drive that volume. And in addition to that, the other side of payments, which is really important, and we've touched on it already, is the ecosystem. You need to get the payment products into the customers that are going to use them as rapidly as possible. So we wanted to take advantage of that. The biggest challenge is, and it's something that we've referred to earlier, is that the big players have such capability. So companies like Trust Payments, Cash Flows, and there's so many other mid-market payment service acquirers, service providers and acquirers. How do you compete? How do you create great customer experiences at a price that customers expect when the product's becoming so ubiquitous? And this is, I think, the challenge of a lot of venture capital, a lot of private equity have invested in these companies. They've now got good turnover, but growth is slow. And at what point do you say, actually, what can we sell this business for? It's not going to be what we thought it was worth. It's one thing if you look at Adyen, if you invested in the early days and said, that company has really taken off. They have the full stack. They've really taken over markets. But the promises of the mid-markets haven't been there. And I really do see a lot of consolidation for those type of companies in the future.
Yeah, that's exactly what I was gonna ask you next. Over 10 years ago, I worked at WorldPay, right? And there were a number of payment service providers around the world, but not as many as we see now. Nowadays, I go on LinkedIn and having ex-colleagues go off into, every single part of the payment landscape. I can't believe how many companies now have something pay at the end, right? So many payment companies out there. I guess you touched on consolidation, right? Based on what you touched on earlier. Previously, it was really difficult to get these payment rails and licenses, but with PSD and a lot of innovation happening. Pretty much any man and his dog can come up with a payment company, whether you're an issuer, acquirer, or a neobank and whatnot. Who do you think would be the winners in this space? Not to name names, but in terms of like what, from a strategy and execution point of view, would they be getting right to be able to do so in such a fragmented market?
Yeah, again, it's a great question. Up till about 2018, 2019, the market was all about customer acquisition. It was about how do we develop ecosystem? How do we drive as many customers at any cost? And the economics were very different. A lot of organizations did very well in taking on customers, and that was the focus. But the market's changed dramatically since maybe 2022, 2023, where investors are really looking for, cash flow. Are you actually going to make it on your own? Now, a lot of companies, mid-market ones I've mentioned before, are doing okay, but we're not seeing great profit. The big challenge is when you see how the market is evolving is that it's become commoditized. So you've got organizations, see, consumers are expecting great experiences. There's lots of different players, if we've mentioned, but it's not about just acquisition. We need to be able to make money. We know volume is absolutely king. But when I was recently at the Pay360, speaking to some of the big players like WorldPay, Fiserv, and what they're telling me is that when they speak to merchants are saying, we just want to use you for acquiring. Actually, we can go and get some of the really great tech from players who can do it better than you. And that's not where those companies want to be. Then you look at companies that take on the likes of Stripe, who offer absolutely everything. It's a great service. But then merchants don't want to be at the mercy often of having to have one supplier and having to take what they're given. So what I'm seeing, I think, is fragmentation, but organizations being very careful, but using that to their advantage to say, actually, I'm going to pick the best company for the type of solution I need. Even if you look at the focus at the moment is tokenization, being able to tokenize your transactions, reduce risk, reduce declines. And actually, there are a whole number of different organizations and companies and suppliers you can use to help you go to market. And you can use each one of those to help you in your proposition development to make sure that transaction works. Now, a lot of that's around your platform. So your customer might not even know that's taking place. But when you look at the value that that's giving, it means you've reduced your risk, you've improved your approval rates. That's a great outcome for a business. The other side of that is actually companies need to be really famous and the market needs to know what they stand for. What's their mission? And so you want to pick and work with companies who, unlike we talked about some of the big names before where they just do a bit of everything, I want someone who's really great at international payments. So I want to work with a partner and, there are loads out there, white label, the likes of Wise, for example, who can give me international payments that I can provide to my customer. I might want to use embedded banking and talked about embedded finance before, buy now, pay later. But the value proposition for embedded banking is really large for payroll, for example, or lending. So someone gives me a loan, but it sits in an account and I can use that as a bank account. Or small businesses now can use embedded finance to manage their payroll in a way that could never happen before. So these are new markets and new propositions. So it's difficult to tell exactly the direction of the market. But the themes I'm seeing are the companies which are famous for what they are that are opening up those new markets, are understanding how they can create value, will be very good. The companies which are big, which are lost, which are just copying and sort of me too, I think they're the ones that are going to get swallowed up.
Do you think there's space for more innovation and for a startup to own that innovation, be famous for it?
Absolutely. I think firstly, the world is much more complex. So I don't think it's just about starting another neobank like another Monzo or Revolut. I think that's not the world we're in today. Now it's about ecosystems. I recently looked at an industry map for stablecoin, and there were over 200 companies involved in that across the whole industry that can help serve a corporate to move into that space. Now, a lot of those companies are large, a lot of those companies are one or two people, but they all add value. So the opportunity for innovation could be about something which is small, something which is specific and in a particular industry. But it's got to be an industry that's growing. So we've talked about tokenization. It's something which is front and center for medium to large merchants today. But there are other areas of growth. We've seen companies that are focused on open banking. Trulay, for example, had a great year last year, not because it's becoming a great way to pay, but because of innovation in other areas of the payments industry, especially around, as we've talked about, payroll, or it could be being able to do credit. So these companies have done very well where I might want to get a loan because I want to get paid early, for example, and that could use open banking to understand my data on my bank account, so they can get a good view of me. And these are the type of drivers for growth. And then going into the future, there are other things, you talked about the digital currency and stable coins, and even further ahead is crypto's there today and moving into the mainstream even further from that.
That's a good segue into what I wanted to ask you next. Now with, stable coins, everyone talking about it being a, I guess, hot topic. I know that my friends at This Week in FinTech are actually launching StableCon, which is the first conference on stable coins in New York. And it seems like everyone in payments that I know is starting to talk about it. But from a layman's perspective, especially since not everyone is in payments or in finance, can you give us a little bit of an overview of what that really means from what that really means for us as consumers, and also how this innovation can help, say, retailers or cross-border merchants be able to accept payments, not just in the future, but right now?
Yeah. Look, it's a great question. And it's one of those where first you need to step back and you look across the whole world, and the amount of commerce taking place is huge. And I don't have the number, but we're talking about absolute trillions of dollars of global trade. And to drive global trade, you need the ability to do transactions cross border. And so there's an opportunity. And for businesses, it's B2B. Now, the biggest businesses, organizations that do B2B commerce cross-border, the likes of the big investment banks like JP Morgan, etc., and they send money to each other. And they are absolutely looking at blockchain and stablecoin, and specifically blockchain and building their own blockchains, because they can create infrastructure which is significantly cheaper to the Swift, and which is a messaging service, and other infrastructure that sits there today. So they can create that. And the volumes are huge. Sorry, the values are huge, but the volumes are quite low. And there's an opportunity there. But we're often sitting in the UK where we are thinking the world is like this, but it's very different. We go into Europe, they've got one market, the SEPA market, but it's at its earliest stages when it comes to instant payments, which was mandated just last year. But the biggest opportunity is around emerging markets. And we're seeing companies, and I saw Verto at Pay360 really going into Africa. We're seeing it in South America and more so in Southeast Asia, which I know less about, where these companies want to really grab international trade and being able to get customers based in those countries and get customers anywhere in the world. First they need to do is get access to payment infrastructure. And there's more and more companies going in to support that, giving them the opportunity to have bank accounts, get access to international payment rails, either through correspondent banking or more likely through companies like Wise, international payment companies that connect networks all across the world, which is fantastic for them. But then the next step is actually being able to do businesses in a way which gives certainty. And the best way to do that is to move away from currency risk. So a lot of these organizations, these businesses in South America, in Africa, often work with currencies which suffer from high interest rates, from the value of that currency changing quite regularly. And it's very difficult to work with foreign companies for them. And so what we're seeing is actually, why don't they just use dollars? And if they can use dollars, could they use digital dollars? And that's in the form of stable coins. I think that's still a very specific use case and not quite there, because they can just work in dollars as well. But these are the type of technologies that will come to play. I mean, there's a huge amount being traded in digital currencies, but actually the opportunity is for those types of markets to get access and trade.
One of the benefits that I'm seeing of stable coins being introduced more and more, especially within cross-border payments, is that I'll give you an example, right? In the Philippines, which I didn't realize, but is one of the pioneers in terms of implementing this. I didn't know that until very recently, and a couple of people told me about it, which is kind of cool. Also, stemming from the fact that it's historically a big mobile gaming market as well. So they've been using blockchain and recently stablecoins for quite a while. It's a massive remittance market, right? There's a massive diaspora, myself included, sending money back to the home country. And the value of the peso is probably not, it does fluctuate quite a bit, but it's probably not as volatile as some other more exotic currencies. But it also gives, from a consumer perspective, I guess, that security that whatever they have earned and whatever they want to send back will probably retain most of its value, right? So totally get it. I mean, from a consumer perspective, I see a lot of that value. I don't think that the man off the street knows about it, if at all, or there's not much education happening. One of my last questions is, what does this mean for the incumbents and central banks and the rest of the, financial ecosystem, right? Is it more like innovate or be left behind? Is it, as you mentioned, there's so many startups doing so many cool things? Is there going to be quite a bit of consolidation happening to be able to keep up with the pace of change? What are your thoughts on the future of the industry?
Yeah, for me, what I'm seeing is, we've got PSD3 coming into Europe, and we're seeing regulations around cryptocurrencies, which will enable people to actually use those type of technologies. What I see is, first, at the moment, it's a tough market. So the companies which are, either they're shrinking, they're really struggling to find a value proposition. And often that's because they're thinking internally. They're trying to find ways to save money. They're cutting costs, but they haven't got their heads up. They're not looking at the market. They're not looking at actually how do they step forward. That's their biggest opportunity. Not just doing a me too, I'm going to be another PSP. I want to move out of acquiring. Who can I partner with? But really understanding the pain points of consumers and all businesses, their customers. And we're starting to see that happen, but we need to see more of it. We've got the big incumbents that have been around a long time who are doing partnerships, often have very secure deals with customers. It could be from, like Fiserv, maybe having core banking or credit card and processing businesses, but they're not finding added value capability. They're taking what they've got, they're paying their bills, but they're not finding that growth. And then you've got that third tranche, that companies like Adyen and Revolut, who are really just smashing it all over the globe because they understand customers, they make their bets, and they really learn from everything that they do, and then they put into practice what they learn. And I think that's really where the opportunity is. Now, a lot of it's about potential untapped market. In the UK, our markets are served well. So to come up with something new is going to be really different. So it is about customer experience. It's about creating ecosystems and getting products into customers' hands in a point where they need them. And then you've got the emerging markets. And for those markets, it's about driving the understanding where it's untapped. How can you go into those markets looking for expansion? In the SEPA markets, so the European markets with a single currency, I read a report at the end of last year from the European Central Bank that said instant payments is going to grow from 400 billion in 2024 to 1.6 trillion by the year 2030. There's massive growth opportunities. Now, a lot of that will come anyway, but great opportunities for growth, but it's not always clear where that will be. How do we take advantage of that? Then you go to the African markets and their economies are growing at 40% a year. How do we take advantage of that? And a lot of it's actually understanding those pain points and being there at the point of sale, being there with the customers in a time that works for them. So there is definitely growth, but it's about organizations stepping back and looking up and actually having a curious mindset, understanding the opportunities and developing that value proposition.
Do you think that in those markets, for instance, these emerging markets, is there space for companies from Western markets to penetrate that and drive growth that way? Or are we going to see a lot more innovation from homegrown startups?
I know there are companies that I met, for example, like Verto, who started in the UK and have focused on those markets. You have to understand the customers. If you're in the UK and you're very distant, it's a market you don't know, you're taking your chances. When I've worked at one or two of these startups and we tried to enter markets that we didn't understand, I've seen from personal experience customers, companies investing a lot and getting burnt. You have to understand those markets. And so that can be incredibly expensive. But with the right market entry plan, it's possible to do that. If you can take your internal knowledge, capabilities, and resources with deep market insight and then go into that market with the right connections, and it's not easy, but then you can start finding growth because you're taking your own intellectual property, your own capabilities and value proposition, and you're using it with new markets. And that's where the biggest opportunity was, or is, in my opinion.
Cool. I could probably ask you 5 million other questions, Joel, but I think that probably needs to be over a glass of wine or something. So thank you so much for your time. I know that we've tried this a couple of times. It finally worked. I'm really happy that we made it happen because your knowledge about the global payments ecosystem is unmatched. So I'm really happy that you're sharing that with everyone.
Thank you very much. I've absolutely thoroughly enjoyed being and chatting with you.
Thanks. Bye.
Bye.
Great. So this was another great episode. Evolve Voices is a podcast from Evolve Commerce Club, the #1 private community, where we connect senior commerce professionals in more than 40 markets. Every week, we invite one expert to share their perspective and their knowledge. If you want to know more about Evolve, look at the link in this episode description to request your invitation. I hope to see you in the next one. Bye.